Hi, everybody. I would like to share with you 4 key learnings from developing a digital assets platform over the past 2 years. My name is Siebert. I'm a member of the management team at Kapilendo. Kapilendo is traditionally a Berlin-based fintech focusing on SME financing. We have been founded in 2015, focusing on SME clients. Nowadays have roughly 40,000 clients all over Germany. We have a team of 43 people in Berlin, and we have financed roughly 160 million over the past years and providing underwriting for those loans. What is our journey into the world of digital assets? Back in 2018, we first considered tokenizing a bond for one of our SME clients and made our first steps into the world of digital finance and digital assets. We added retail custody and issuance services in 2019 and completed our service offering towards financial services companies by also providing asset servicing for crypto funds and digital asset funds recently in the past months. So I do not want to bother you too much with the theory, but more jump into real-life use cases. In 2019, in December, we issued for the first time a digital SME bond for the L'Osteria, a huge pizza and Italian food franchise company in Germany. It was the biggest STO at that time, reflected on Stellar. It was completely BaFin approved, issued out of a short prospectus, and finally financed by more than 1,300 investors all over Germany. We have provided the whole tokenization and issuance protocol for this issuance, as well as the retail custody, and also provided security brokerage and payment services for this issuance. Being in the situation that we provided custody for our retail clients within that issuance, we kind of moved into the business of providing crypto custody. We got the preliminary approval for custody services for crypto assets in Germany at the beginning of this year. And out of this positioning, moved into asset servicing for crypto funds and digital assets. We entered into a partnership with Hauck & Aufhäuser in May this year and are currently working on providing asset services for digital asset funds as well as crypto funds, where our part in this partnership is, again, the custody, this time institutional, as well as secondary market access to various native crypto assets and ERC20 tokens, but also value-adding services like reporting, net asset value calculation within the fund, and other services that come around. We nowadays are capable of providing custody services for Bitcoin, Ethereum, ERC21 on 20 tokens, as well as Tezos and Stellar. All of our digital asset capabilities are, from a technical point of view, consolidated in our digital assets platform that nowadays targets financial services companies that are willing to make strategic steps into the digital asset finance world. We have asset managers as well as wealth managers and portfolio managers and as our clients, but as you can also see with the L'Osteria placement, obviously also corporates willing to use our platform for tokenization services. By developing our digital asset services more and more, we decided to bundle all of our digital asset expertise within a new legal entity, the Kapilendo Crypto AG, that is nowadays a 100% subsidiary of the Kapilendo AG, again located in Berlin. The Kapilendo AG, Crypto AG, has 2 subsidiaries carrying a custody license to provide crypto custody services, as well as licenses for investment brokerage and wealth management services, bringing us into a unique positioning of providing leading B2B services to financial service companies that are cutting edge technology, but at the same time also fully compliant. Saying all of this and kind of doing the recap over the past 2 years and what were our learnings over the past 2 years, I would like to share 4 key learnings I have made over this time, and what we believe is important when you make a strategic step into digital assets and into crypto finance. First things first, the regular framework always matters, and we are very pleased to see that the regulatory roadmap in the EU as well as in Germany is very nicely packed and really making some great progress over the past months. However, we believe that adoption to those new regulatory frameworks will take some time, and that traction in the crypto industry, again in 2021, will not that much come from tokenization, but probably more from crypto investments itself. If we have a look at the regulatory roadmap a bit more in detail, I think most notably the draft bill on electronic securities in Germany has been a huge step towards a clear regulatory framework for tokenization within Germany. But we're also very pleased to see that with MiCA and other EU regulations, we see today unfilled gaps in the regulatory framework being filled, and more clarity is brought into the market. We believe that especially DORA should be something considered by all financial service companies all over Europe, as it will provide some strict guidelines on IT security that not just only matter for crypto companies, but also for all traditional financial service companies. You can scan this QR code if you want to get a more detailed perspective on our opinion on the draft bill for electronic securities in Germany. That is also available on the homepage of the Ministry of Finance, where I think we have one point that really matters to us when it comes to the draft bill. We believe it's a very wise step by the standard setter, especially by the Ministry of Finance and Justice, that came up with this draft bill. However, what it is missing today from our point of view, most notably, are technical regulation standards. So we understand the new financial services that can be provided with crypto register, with crypto issuance and security issuance. However, what we are missing today is what are the clear technical specifications and requirements, for example, for electronic securities to be issued on a crypto register. Those are not specified, and from our point of view, need to be drilled down at short notice in order to provide some more certainty to new and existing market participants in order to make smart investment decisions, whether or not, for example, using Ethereum for electronic securities in Germany. From our point of view, still an unsolved question that needs some immediate clarification from the standard setter in order to provide the industry with some more certainty. Second, coming from tokenization, we believe that it will emerge and that it's most likely the biggest use case in digital finance and provides some clear efficiency potentials to the financial market. However, also taking our experience from the Losteria placement into consideration and seeing into what, let's say, challenges we were also running by doing this issuance, we believe that some building blocks are still missing in order to provide tokenization and electronic securities a real boost in the market. And that's, from our point of view, clearly settlement. We need a digital euro, as we had with the Losteria placement once again. The transfer of ownership being reflected on-chain, but the transfer of interest payments still being reflected in the traditional SEPA payment framework, always leading to a situation where you have two infrastructures running in parallel. we had to issue securities. That's a regulated financial service within Germany, so we had full KYC and compliance rules applying within our investors process. Self-sovereign identities and digital identities definitely will help making the investment process more smooth from a supplier as well as from an investor's perspective. So that's, from our point of view, a second very relevant and important building block that is missing in order to provide tokenization a real boost in the market. And last but not least, we need a higher interoperability between the whole infrastructure, as we see a clear risk at the moment of seeing different silo infrastructures emerging within the market, driven by different providers within the market. And we are really asking ourselves, where's the jointly agreed market infrastructure should come from? And from our point of view, this only can be solved technically. Moving into asset servicing and providing crypto services to fund managers together with Hauk and Aufhäusers, we quickly realized that when you want to provide institutional custody services, it's not enough to just provide the custody services itself. You clearly have to broaden your service offering beyond pure custody in order to be a full service provider to those institutional clients, as they expect a lot more from you than just private key management or custody of native crypto coins. And what we identified within our partnership with Hauk, for example, has been that topics unrelated to crypto, but very related to the fund industry, really matters when it comes to building solutions that really fit market demand and fit into the legacy infrastructure, in this case, the fund industry. So integrating our custody solution and primary market access solution into the net asset value cycle to calculate a daily fund price, for example, has been something that really mattered to us and had to be solved, not related to the blockchain, but with a lot of, for example, an ordering workflow that takes into consideration that we can do a cash reconciliation on a day-to-day basis to have always steady cash balances in the fund and no mismatches in the NAV calculation. We also had to provide secondary market access in order to provide best execution to the fund managers within the partnership. And that, again, was a service that came on top to our pure custody services, and we believe is a key component in order to be a good provider and good partner to the fund industry in this case. Reporting, providing trade tickets, and all those, I would say, industry standards that come from the fund industry and once again not from the crypto world, again had to be added to our platform and services in order to provide a complete service offering. And this brings me to my last point in the end then. I think we are in a clear transition period of traditional and digital finance. And if you want to position yourself, no matter if you're a fintech company like us or a more traditional financial service company, if you want to position yourself strategically in this transition period that we are currently experiencing, we believe that bridging traditional and digital finance is one of the core competencies that you have to develop as an organization and as a company. And that matters once again on the crypto side, but also on various other topics like what I just mentioned, integrating our own digital assets platform with a legacy fund bookkeeping tool or fund bookkeeping system like Centers, for example, was a clear was an extremely important platform functionality we had to provide within our partnership with Hauk and Aufhäuser, and again was only possible or really underlines our understanding of bridging, in this case, the crypto investment world as well as traditional fund industry. We had to implement workflows for reporting cutoff times in various of our partnerships and projects, again showing we really have to get into this bridging and translation functionality of bringing together existing legacy processes of traditional financial industry together with the crypto world and its own rules that it sometimes has. And I could add many, many more examples, but what I would rather like to do is inviting you guys, should it be online or also here in person in Frankfurt today, to a case study workshop this afternoon at 3:45. What we would like to do when having a bit more time, we are planning with 1 hour, really going a bit more into the details, providing a view behind the scenes of our digital assets platform, walking through some of our use cases and really providing you with some more deep insight learnings that we have made on the way to become a digital assets partner to the financial industry, but also to corporates that are willing to use tokenization as a form of financing, should it be on the debt or on the equity side. So you can easily scan the QR code shown here. You have to register individually for this event, as we have to take control that all corona measurements here in Frankfurt are fulfilled in the room. But as I said, also be invited to join this case study workshop online. And yeah, we're also logging into our platform and show some details of how we solve the different use cases we have developed over the past 24 months. And yeah, we would be happy to have you. And thank you very much.